Hey, future homeowners. Are you feeling freaked out by high interest rates and wondering if now is really the right time to buy? If you're thinking about hitting pause on your home search, hold up. Stick around to the end for a little-known strategy that could lower your rate and save you real money. Let's dive in. Tip number 1, interest rates aren't the only factor. Here's what really matters. Let's clear something up right away. Interest rates alone don't determine your monthly mortgage payment. You also need to factor in things like PMI, lender fees, loan type, and even how taxes and insurance are handled. That's why it's so important not to go with a lender just because they're advertising low rates. Focus on the total cost of your mortgage when you compare interest rates and fees side by side. Focus on the total cost of your mortgage. When you compare interest rates and fees side by side, you'll get a much clearer picture of which deal is actually the best. Don't leave money on the table. Tip number 2, calculate the real impact of your monthly payment. Now that you're looking beyond just the rate, let's talk about how your mortgage payment fits into your bigger financial picture. Here's a little TMI. I locked in a 5.9% rate when I bought my house a few years ago. We bought it down. That sounds pretty decent, right? But here's the kicker. I was uncomfortable with the payment from day one and told myself I would just refinance later. Well, we're years in. Rates haven't dropped, and I'm still stuck with that payment. The takeaway, focus less on the number itself and more on how that payment affects your real life and long-term financial security, especially if things change unexpectedly. Talk to a financial advisor if you need help crunching the numbers. I'm happy to refer you to one. Tip number 3, don't forget about seller concessions. This is how you can lower your rate. Here's something a lot of buyers overlook. Seller concessions can help you lower your interest rate. Right now, it's actually pretty common for sellers to offer closing cost credits. You can use that money to buy down your rate, which can lower your monthly payment significantly. Seller concessions could potentially knock down your rate enough to save you hundreds per month, but you've got to work with your agent and lender to make sure this strategy fits into your overall financial plan. Every deal is unique, so making sure that you understand how this works in your specific situation is key. If this all sounds overwhelming, I've got you. Click the link in the description to schedule a free consultation with me. I'll walk you through your options and help you come up with a strategy that makes sense. Remember, high interest rates aren't the end of the road, but they are something you need to understand before jumping in. Take action, compare your options, and protect your future self. If you found this video helpful, don't forget to like, subscribe, and share it with anyone else you know wondering if now is the right time to buy. And drop your questions in the comments. I love hearing from you. See you next time.